need to spend some time, the basics, right? Like I always talk about on this podcast, insurance is so full of jargon. None so more than I think stop loss, but I think captive rivals it to a degree. So can we talk some terms, right? Like
I'd love to.
In the very beginning, I think captive manager probably is a place to start, and then I'll go down through the laundry list. But I want to spend some time defining it. Even if this is maybe boring for some folks, at least we define the terminology we're going to use for the rest of the conversation. So captive manager, what is that?
And I'll even go one up. A captive.
A captive, let's start there. Let's start at what is a captive?
What is a captive?
Even better.
So fundamentally, a captive, by definition, is a private insurance company. Okay? So you have the commercial carriers, which are... they can sell insurance policies to the public. Okay. The captive can only sell or place an insurance policy to its owner or subscriber or member. Okay. So private insurance company is what a captive is really called.
What is it? Does the captive term mean? I mean, like you say, it's private insurance, but what makes it captive? What is being captive at that point? The risk itself, or did I jump ahead?
No.
Okay.
So you're asking about the history of the label.
Yeah,
captive.
I'm curious where that terminology came from.
So the history of captive started out of a mining company, and the mining company was having struggles placing insurance, and the mine was a captive mine.
Okay.
So the word captive was born out of just the term of the mining company and how they mined the ore out of the earth. It's a captive mine.
So that's the origins of it.
That's the origins.
Interesting. Oh, dude, I appreciate you. I'm glad I asked, and you're like, I have no idea, Spencer. Yeah, that was good. So born out of a mining company, we talked about a captive is a private insurance company.
Yes.
Okay. So then that could lead us in. Anything else we need to know on that? Okay. So captive manager then. Obviously, people can guess what that is, but tell me what their actual blocking and tackling, what they're doing as a captive manager.
So a captive manager really sort of replaces the commercial carrier's operations of that insurance company. Because remember, the commercial stop loss carrier has to report financial results to the board or shareholders, right? In a private insurance company, there's no shareholders per se. It's the members. So the captive manager's role in a captive is really the go-between between the client, the member of the captive, and the regulators. Because every captive has what's called a domicile.
Okay.
And a domicile is where the captive calls home. And within the United States, there's probably 40 captive domiciles.
Okay.
So you can take your pick, laundry list of captive domiciles. Some are better than others, right? It's, if your ambition is to go to Hawaii for a board meeting, then maybe you want to be domiciled in Hawaii.
Okay.
But generally they're all the same, but each has their own little twerk. So the captive manager does all the regulatory affairs for that captive to report to the captive domicile.
Okay, so all the regulators. I mean, so is it safe to say they're an administrator, kind of like a
Very
TPA is the administrator of the medical plan? Okay, so a captive manager is helping manage the plan, choosing where it's domiciled. I get pushing and pulling money, or are they doing that? Is that the carrier? If there's a front, we'll get into fronting carrier in a moment. But
But the captive manager is largely an accounting mechanism.
Okay.
Very large.
So a lot of captive managers have accountants on staff or
Very
CPAs
much
on
so.
staff. Okay.
Yes.
And did they get lumped into as an SIC code an accounting firm, or any idea there?
Well, that's a good question. I don't know the answer to that.
Okay.
I'll get back to you.
Good. I stumped you. Yes, I did it. No. So we often hear about group captives. I realize that's, I think that's the more popular form of a captive.
Yes.
There's also single parent captive. So define what is the contradiction or the opposition to those two terms there?
So Medtrans started as a group captive.
Okay.
And the reason group captives evolved in the medical stop loss side is because workers' comp group captives were around for years and decades before medical stop loss. And I think that the playbook from the group workers' comp captive just kind of fell into the laps of the medical stop loss arena.
I see.
Now, group workers' comp captives have to be fronted by a commercial carrier.
Okay.
I'm jumping ahead of myself. So a group captive, by definition, is one tax ID number, one captive. Okay. And then you have multiple employers or participants or members subscribed to the captive.
Okay.
Okay.
And that can be homogenous and heterogeneous as well. So you want to explain those terms as well?
So homogenous is the same like SIC code.
Yeah.
Okay. And then heterogeneous is any class. Now, workers' comp captives, you have to be generally homogenous because of that, the pricing of the workers' comp captives. But with medical stop loss, you don't have to be because cancer doesn't know professions.
Yeah. Yeah.
Right. So it doesn't have to be.
Hey, do you know kind of rough numbers? What percentage are heterogeneous versus homogenous? Like, is it one more popular than the other in terms of group sales?
I don't know that answer. From experience, generally, what I like to call verticals. Some captives will have like verticals of just manufacturers.
I see. Yeah.
Right. Because it's easier to start a group captive with a vertical because there's greater fraternal effects in a homogenous captive. Right. Because a bricklayer wants to do business with another bricklayer on this space.
Well, and the risk profile of the employer is similar, right? So if you're looking into cost containment and controlling claims, like, hey, we know we experienced this, you likely experienced this type of consumption or claim as well. Okay, so that makes sense. So that's group captive.
Yep.
Now we've got single parent.
Single parent.
Tell me what a single parent captive is.
So MedTrans changed its structure in 2016 to what's called a single parent captive.
Okay.
So by definition, a single parent means the captive has one owner, and that owner is usually a business. It could be an individual, but it's usually a business. And in our model, each employer gets their own single parent captive.
Okay.
And there's several benefits to that which we find more attractive than the group model. One of those benefits, and I don't want to get too granular too quick, but accounting is favorable.
Okay.
So when an employer joins or is a participant of a single parent captive, they are paying for stop loss premium from this pocket, their corporation, and that money is deposited into their own captive.
I see.
Okay. So the employer picks up an expense over here, picks up an asset over here that are equal.
Okay.
And through what's called consolidation, financial statement consolidation, you can consolidate the captive's financials and the corporation's financials.
I see. Okay.
You can't do that in a group captive because consolidation is only allowed if you own 51% of an entity.
Okay. So that makes sense. So there tax advantages, I guess you could say, or it's not necessarily tax.
It's not necessarily tax. It's you're picking up an expense and you're picking up an equal asset, and they offset each other.
Okay, I see. Interesting. So, okay, so obviously we'll dive deeper. And for those of the folks that are listening, of course, listen back if we go too fast.
Yes.
Phil obviously is a wealth of knowledge, but this is not something anybody's going to understand in an hour. That's why I'm doing a second part to this as well. But I think it's deserving of spending this level of time, and then we'll make sure people know how to get a hold of you afterwards as well.
Yes.
So